Well, good evening, everybody. It's Richard Bowser here from Property Investor News Magazine, and welcome to our May webinar. Thank you for those of you who have joined in already. Good. Okay, let's get on with this one tonight. Slightly unusual one tonight. First part will be, as some of you who regularly attend our webinars will know, we've got a presentation. In this case, it'll be from Karl from CPC Finance, who are tonight's sponsors. And then we've got three panelists tonight, plus Karl. And rather than having a PowerPoint presentation, I'm going to field some questions on the current marketplace on the theme of what, where, and why, and probably a little bit of how, and talk about some specific strategies in the current marketplace that our panelists might want to give their thoughts on. And then we'll open it up to questions from you guys, the attendees tonight, for anything that you want to bring to the attention of the panel. And obviously, Adam Lawrence is a serial property entrepreneur, and we've got J&P from Hammered, the auctions market specialists. So that both of those, all three of them actually combined to produce two articles for the May edition of Property Investor News, and on the theme of buying and or selling in the current marketplace, and that's what we're going to be talking about. Karl, are you there?
Yeah, I'm here. I'm Karl Griggs from CPC Finance. I've been on these a few times with Richard. Just the first details there is who I am, and I'm going to just, because we're not linked up, I'm going to ask Richard just to flick the pages so that I can go through them as and when we get to them. So if you could just click over, Richard. Okay, CPC Finance, we're a regulated mortgage broker, both, and we basically deal with anything secured on property. Short-term, long-term, second charge, first charge, development, well, it's all listed there, HMO finance. So what I've done regularly with Richard is try and give you a monthly sort of project that one of our clients has completed, in order so that you can get a feel of what we do, how and how it works. The one tonight is a new client to development or conversion, more than development, with very little experience, but they teamed up with a firm of builders stroke project managers that have done numerous projects. One of the benefits of that is that technically on paper to a lender moving forward, once the project's completed, they've got the experience, even though they haven't done the work themselves on paper, they've got the experience of doing a quite large conversion, which then helps on the next level of funding. So they bought in a limited company. They bought a property at auction in October 2020. Details are on there. Where's it gone? There. It was a freehold premises, which was basically a shop with a flat above. The shop was already sold off on a long leasehold, so it was just the actual retail unit they gained with a little bit of ground rent from the shop. So what we've done in order to complete was a 75% bridge. Again, because there was no load of work was going to be carried out, we retained the payments out of the advance, so the clients didn't have to worry about their cash flow. Now, the other thing that we've done was arrange a separate loan for them to either top up the deposit, depending on how you look at it, or also to fund or towards the funding of the works to convert the property, which I'll show you in a moment. That enabled them to put less cash into the actual project and assist them with getting it funded at a lot higher loan to value. One of the reasons for that was the firm of project people that they were using was known to the bank, and they were happy to support the two separate parts of the facility. So if we can move on a slide, please, Richard. So that's the view from the outside. Now this is actually, just so I can explain, the roof at the top is actually this is the after photo from the street, where they'd actually done the loft conversion, which we'll come to later. But looking from the front, apart from the roof, that's basically what they bought. If you flick up the next one, please, Richard. This is the back. The actual entrance to the flat is up this stairway on the left-hand photo, and this is the entrance into the building, which was in pretty poor condition. Flick up again, Richard, just a couple of the internal photos. So it was just a basic residential flat in a very rundown condition. Again, that's the front room. The next photos, a couple more of the front rooms. But if we jump to the next one, it will show you the bathroom, the internal condition. It was adequate, but it was only a residential unit. The next one, please, Richard. Again, the kitchenette area. And then what they planned to do was obtain planning and convert this into a 6-bed HMO, which needed the planning for the extension and roof conversion, which they obtained. But overall, the big plan was to spend a lot of money on the conversion, all en suites, and the total, if you flick up one, Richard, the total cost of work to do it all, so it's 5 beds, not 6, was £125,000. Again, the loft conversion, the roof windows needed the planning consent, but because there was retained payments, they didn't have a monthly commitment, and they were able to concentrate on getting the work done. This resulted in them obtaining the planning for the rear roof extension, installation of the 3 lights, and converting the whole project, the residential unit, into the 5-bedroom flats. Now, they bought in October 2020, and they had a valuation done in advance that gave an expected GDV to them, so they knew that they were in line for the figures that they wanted, and it's the same valuer that re-inspected afterwards that came back and valued the asset at 60,000 in April, 600,000, sorry, in April 21, with a rent from the 5 en suites of £51,000. So with the planning and the HMO license, it was a good deal to take over to a term facility. And if we flick up one, please, Richard. Again, you can see it now from the outside. There's the main entrance, the loft conversion extension added on, and if we flick up, what they've done is use the same fill all the way through the flat. There's one of the bedrooms and one of the en suites. So there was 5 of these units, all different sizes, all producing slightly different rents. Up again, please, Richard. This is the actual loft conversion with the light, the windows that were put in at the front. The next one again, Richard. The next couple are just showing you all the different bathrooms and en suites, different room sizes. And the next one will show you the communal kitchen. And that's actually the exit door as well. So that's all in the communal area. So going back, they bought it for 320. They spent 125,000 on it. So the all-in costs of the facility plus stamp duty at the time was £450,000. You've gone back, Richard, rather than forwards. That's it. And when we remortgaged it, they took out all the money that they'd put in and paid off the 2 charges. And now they've got an income producing facility of 51,000, mortgage payments of 1,700, and they're clearing £2,500 a month on the rent profit. So although they've got some money tied up in the property, they're getting it back out on a monthly basis. So this is slightly different, this one, because it's actually a flat. And it's the freehold they bought, but it's just to show that even a small unit, a 3-bedroom flat, can be converted into something bigger and income producing if you look sometimes outside the box. They took a risk at buying it at auction, but they're pretty confident they've done their work in advance, used the right team, and turned it around in 6 months. Overall, it's a good project for them, and they've moved on to another one since. These are the way that we do the finance. So it's a short-term loan and also the additional refurbishment loan, just ensuring that it's all covered off when we remortgage it out. So that's just examples of what we do. If go up one, Richard. So if anyone's got any questions or wants to get in contact with me, there's my details. Happy to discuss any questions that are raised, but otherwise I'll leave you to it. And that's back to you, Richard.
Thanks, Carl. I'll just play around with the screen a minute. I'll get the question box up. Okay,
Yeah.
guys, thank you, everyone. Okay, you've got the question box there for you to use. If you've got any comments on that presentation from Karl, please ask now. Seemed a cracking little deal, that, from what I could see.
Yeah, the good thing about it is that it was mixed, because that they were inexperienced, but by teaming up with the right people that they knew, their friends, or that they were friends of theirs, we could cover that off and also arrange the refurbishment loan at the same time. So yes, they took a risk, but it was a calculated risk as far as I saw that one.
Yeah, that's it. So Suresh is asking, how do you get a builder that does all that for 125,000?
I can put you in touch with them. It was done. Fortunately, Richard knows them as well, and they do produce on those figures. Yeah.
I thought I recognised some of the.
It wasn't for them; they'd done the work.
Yeah. There you go, Suresh. It can be done. Right. So, question from Aruna: what was the LTV for the refinance?
This one was 75%.
Okay.
And the good thing about it, as I explained, they knew the day one exit figure, because the valuer confirmed the current value and the GDV value, and it was with a lender that was always going to use the same valuer. So it was, as long as they produced, it was a guaranteed exit.
Okay. We've got lots of questions now, Karl. They've all had a think and they're firing them in. So
I'll try.
We're going to go into rapid fire question and answer.
Okay.
So Suresh says, actually, his is not a question, it's a comment. He said, that is a deal. So congratulations to your client there, Karl. Right. Okay, so this is from Ian Williams. Ian says, hi Karl, what interest rates do you typically charge for the mortgage and loan elements?
Right, the short-term loan, the day one bridge is split into two different products. These clients were very inexperienced, so we had to go outside a standard facility. We've done the 75% short-term first charge. That was done at 0.75%. The top-up loan was done as a one-off loan by a private lender, and the rate on that was 1.5% a month. But there are other products for experienced people where they actually do the day one loan and the refurb loan all as one facility at 0.84. So it all depends on the experience and how you build it. So sometimes you have to pay for your first one where you've lacked experience. If you tick all the boxes, it'll always be done at the cheaper rates. But it's building that experience CV, if you like, to present to the banks. As I said earlier, the clients didn't do any of the work, but they can now say that they bought and done a conversion project. And that's all the lenders want to see. In terms of the term out, it was done on a yield-based valuation, so it's a commercial mortgage at 4.5% all in.
Okay, and I hope that's answered your question there. Thanks, Karl.
Okay.
Pete Lydon says, why did they put a kitchenette in all the bedrooms?
Because of the space of it, they wouldn't have got them all in, and they kept it clear so that it was only one communal kitchen, and going down the conservative view going forwards to do with any council tax coming in. So
Yeah.
it's clearly a self-contained unit.
Okay.
Different
Carl?
discussion.
Yeah. Sorry, Carl. Do you want to say anything else?
No.
Okay, yeah, just Carl and Pete and anyone else. We're actually addressing this issue of council tax banding in shared accommodation HMOs in an article in the upcoming magazine. So keep an eye out for that, because it's obviously been a slow burning, smouldering fire, which is clearly affecting the sector, shared accommodation HMO sector. So we're doing an in-depth article on that upcoming. Right. Sim Hawking says, question for Karl. Can you get 75% loan to value on your own residential house, or is it based purely on income?
If it's the house you live in, it's your residential main house, it's always done on income. And that loan to value can go a lot higher than 75%. It's all about the affordability. Yeah.
So if you're earning 100,000 a year and you want a 50,000 pound house to live in, then yeah. Okay, I hope that's answered your question there, Sim. Aruna says thank you. Dorothy Clark says, what's in the kitchenette?
Sorry.
Yeah, I'm not quite sure.
If she's referring to putting a kitchenette in each room, it will be majority of the kitchen facilities apart from a hob, but they chose to keep it all in one communal area.
Okay. Right. Sorry, we've got crosstalk there. Okay, Arvinder Gill is saying, are lenders often this optimistic on valuations, or is this an exceptional deal?
It's not the value. It's not the banks or anything. It's purely the valuers. And if it is going to be with planning, the correct planning, obviously, in some areas, the license in place, and clearly a HMO valuation property, it's always going to be on a yield-based valuation, and that way it is what it is in comparison. It's not a bricks and mortar. Again, it's another discussion between a bricks and mortar valuation and a commercial investment valuation, depending on the product and the lender. And unfortunately, a lot of people are mixing the two up. This type of valuation and borrowing is a commercial investment mortgage, not a residential buy-to-let stroke small HMO product.
Yeah. Hope that's clear, Arvinder. Thanks, Karl. Sanjay says yes. Sink and worktop is the. Oh, good evening, Sanjay. Sorry. Yeah. So the kitchenette is sink and worktop. Yeah. Also a fridge. Right. Sim says thank you, Karl. I have the opposite problem. A high value house of $1 million and an income of just somewhat less than $1 million. So I'm not able to get 75% loan to value on my remortgage. Yeah, I mean that's the issue, isn't it? You've got a lot of people these days with high equity, and
I think me and you were involved in a webinar type thing recently. There's quite a big clubhouse one that was. There's quite a big on buy-to-let split between North and South divide.
Indeed.
North is all about cash flow. South is all about more money tied up into the deal, but you're going to get a lot better appreciation over a number of years.
Yeah.
Into that HMO side of it, if it's done properly, I can't see anyone not reaching the 75% loan to value if it's a large HMO type property because of the rentals that's producing. The only thing that can sort of control the loan to value a little bit more is whether it's in personal or limited company because of the stress levels. That's the only time it could be affected.
Sim, can I suggest you get in touch directly with Karl after, or tomorrow, or whatever suits, His contact details will be on the end of these slides. So if you want to get in touch and clarify a little bit more as to how Karl may or may not be able to help you given your specific situation. Okay, Sim's just added another. He said currently the property is unencumbered. Arvinder says thanks, that makes sense. Another question, Karl, as we come towards the end of your session.
Yeah.
Have any of you dealt with buying a property with a SIP? Wish to know more about this. We have covered this previously. Any comments on that? Buying property with a SIP stroke SAS, Karl?
There is a different criteria for that, and you need to look into it. There's two sides to it. One is the amount the actual SIP can raise within the terms and conditions of the SIP itself. But one of the big areas on that is the actual criteria of the banks. A lot of them don't entertain loans under a certain level. Some is £250,000, some is £500,000, some are £1 million because of the work involved in it, and it's purely that reason. So before going down the route of buying or looking into buying it, you need to make sure there's actually a criteria out there to meet it.
Okay, hope that answers your question, Rita. A little bit more due diligence, a little bit more research into lenders that are going to lend into the price bracket that you, yeah, hope that makes sense. Sim says thanks, Richard, and he's going to get in touch with you, Karl.
Okay, thank you.
That is tonight's end of tonight's questions related to the presentation from Karl Griggs of CPC Finance, and I'll put Karl's contact details there. Sorry about the flickering of the slides, guys. It's just a glitch with GoToWebinar that when I'm controlling the webinar myself without any outside input, for whatever reason, there's always this problem between the. Hang on. We've got one question. This is an interesting one.
Okay.
So Suresh says, have you included all the fixtures and fittings and cost of EICRs and planning and HMO license fees and the cost of finding tenants in those figures? I'm assuming
that particular one it has, because it was a whole project cost, the 125, including fitting it out and finishing it in the finished where I said the fill is all the way through, and they then signed it over to the same company to property manage it with the tenants.
Right. Okay.
Include finding the tenants, but they had them lined up because they knew the project was finishing.
Okay, so it's a bit of a one-stop shop for them in terms of yeah, cool. Okay, well, if you want to know any more on that, I'm sure Karl will be able to answer any more questions on that particular project or on that model. And Suresh had actually come back and said thanks, Karl, and for some reason myself as well. Great talk.